Hi, Adam here from Future Set Mortgage Broking. Hope you're doing well. It's Friday. We're bringing you mortgage tips. Each week we try to debunk some of the myths and explain some of the jargon when it comes to property finance and mortgages. And today we're just talking about what's the, outside of having no income, what is the number one borrowing capacity killer. So as a mortgage broker, when I do my assessments across all my clients, we generally sort of unpack that, your financial situation, look at all your assets, look at all your liabilities, look at your expenses, and generally when everything sort of looks like it's all going to work, the one thing that tends to sort of maybe sort of reduce people's borrowing capacity, or sometimes eliminates people's borrowing capacity totally, is living expenses. So it's really important to, when you're sort of looking to go for a loan application or looking to do a pre-approval, is to make sure in advance of that you start thinking about your living expenses, especially your discretionary expenditure. So if your living expenses are way higher than the lender's benchmarks, then this will really affect your borrowing capacity, and sometimes it can almost eliminate your borrowing capacity. So something to keep in mind. Generally, from what I see is most people tend to underestimate their living expenses. Which is sort of normal. That's pretty sort of, it's hard to sort of always know exactly what you're spending your money on each week, each month. Part of my job as a mortgage broker, I do a sort of, almost like a deep dive, an audit on your expenses, so you know exactly where you're spending your money, and also where you can make changes if necessary. So if you can't borrow at that point in time, you know what to do and what to make changes. And it's really important as well that when you get put into a position of debt with a mortgage, that you can really afford to do what you're doing. So you don't want to sort of necessarily sort of put in a figure that is below what you're really spending on a day-to-day basis, because if you get to a point where interest rates rise, cost of living is going up, you never want to be in a situation where you're struggling to pay your mortgage back. So it's really important as the mortgage broker that I give you the guidance around that, and only put you into a position of debt when we've done a full assessment and we know exactly what your limitations are. So that gives you confidence as the applicants and the clients, and also ensures that I'm doing my best interest by you. So that is the big thing. So if you are looking to get ready for a loan pre-approval, looking to buy, looking to refinance, just keep that in mind. Monitor your discretionary expenditure, try and reduce it down. You really need to have like at least a couple of months of sort of, I guess, what you call good behavior, and just try and sort of keep that sort of figure nice and low. So when we do the application and we do that assessment, we're presenting figures that are true, and also help you to sort of to borrow to your maximum ability. I hope that helps. If you want to discuss your situation, your financial situation with myself, if you want me to look at your living expenses, to do a deep dive into that, if you're looking to again sort of purchase property, refinance, do debt consolidation, or looking to become a property investor, please feel free to use the link or button below, book a time for an initial chat. We can have a quick chat around what your goals are, and basically go from there. For now though, it's Friday, so enjoy your day, have a great weekend, and I'll chat to you soon.